Welcome to the overview presentation of the Return to Vendor module. The process of returning items to a vendor needs to be managed and controlled. These items are still an asset until the supplier gives a credit, a replacement part is received, or the item is scrapped, and as such should be subject to the same controls exercised on other assets. The RTV module allows for a formalised return to vendor process at any time. It is used to remove the defective stock from general availability into a virtual RTV review area. This means that stock cannot be issued in error to a work in progress job or to a sales order or promise to a customer. While in this area, the user has the opportunity to investigate who supplied the item, the original purchase details such as price and date, and then to negotiate with the supplier the terms of the return. Once the action to take has been determined, the user can use the module to return the item to the supplier for a credit note or replacement, or if the item cannot be returned, it can be scrapped. The module has been designed for use with the GRN suspense system, and as such must be activated in the purchase order setup. The RTV module caters for both stocked and non-stocked items. The RTV process is initiated by either a negative stock receipt in the inventory movements program, a return to vendor action in the sales RMA, which requires the returns merchandise module, or if it is for a non-stocked item, manually added in the RTV review program. The RTV process will create purchase orders for expected replacement items, reducing duplication of entry. It will create GRNs with negative values to match credit notes against, and the scrapping of non-returnable items will increase the value of the scrap account. Financial control is a key aspect of the RTV process, so we can look at some example general ledger integrations that the RTV process will facilitate. Negative inventory movement to create an RTV. This will generate a debit to the GL account for RTV control to increase the value of the RTV control, and generate a credit to the GL account for the items warehouse to reduce the value of inventory. When the RTV is credited and or replaced by the supplier, this will generate a debit to the GL account for GRN control to reduce the value of the GRN control and generate a credit to the RTV control account to offset the original debit entry. If the RTV is rejected, this will generate a debit to the GLR account for RTV scrap to increase the value of scrap expense account and generate a credit to the RTV control GL account to offset the original debit entry. We will now proceed to a demonstration of the Return to Vendor module. We will start off in inventory movements and enter a negative receipt for the item we want to return. This part happens to be lot traceable, so we can also select the batch to return. The batch information will also tell us who the supplier is and the original purchase order. Although it is not necessary to have batch traceability, it certainly is useful. Because we have the RTV module switched on, we now have a prompt to add the receipt to the RTV process. If we know the original purchase order, we can type it in or select from the purchase order browse. You can also enter any anticipated freight and handling charges. We use the RTV review program to maintain and action current items awaiting return, or to add a non-stocked item to return process and to view historical returns. Here we can see a list of returns awaiting action. We currently have a return for a non-stocked item, one that has been generated via the custom customer return merchandise module, and the one we created just moments ago. We can interrogate the detail of each of these. We can also change the view to look at historical returns that have been actioned or rejected. If we need to correct the original purchase order number or the vendor, we can maintain the return record. Upon negotiation with the supplier, we can then either accept the RTV or reject the RTV. Rejecting the RTV will close the return and increase the general ledger scrap expense account. When we accept the RTV, we can enter a vendor reference. This will typically be an RMA number issued by your supplier, so they can tie the transaction in their system. We have another opportunity to correct the supplier and the original purchase order number. We can choose an RTV type. Select credit if the supplier has agreed to issue a credit note. Where the supplier has agreed to repair or replace the item, replacement is selected. In our example, we will do a replacement. The quantity and price will default to the values entered when creating the RTV. The quantity can be changed to a lesser amount. If the quantity is reduced, another RTV record will be created, allowing you to reject the quantity remaining. The price can be changed to any amount as agreed with your supplier. If the price is amended, then the variance will be recorded in the RTV variance default GL account. If freight and/or handling charges are included on the RTV, they will print as comment lines on the purchase order generated for the replacement. There is also a setup option that will allow you to choose if an accounts payable credit note should be generated against the supplier. Once we click on Save, we can generate a return slip to accompany the item we are returning, and we can also see the purchase order generated to manage the replacement and the GRN created to manage the credit. When we receive in the replacement purchase order using purchase order receipts, the GRN created for the receipt will be recorded against the original RTV record. So let's do the receipt. And now look at the RTV review. It has disappeared off the review list because it has now been actioned, but we can change the options to review the historical returns. Here we can see the GRN number for the credit and the GRN number from the replacement purchase order we just received. If we go into the supplier query, we can also see this information under their GRN notes. We have the GRN for the credit generated by the RTV and the GRN for the replacement. We can use the accounts payable invoice posting program to match these transactions. There is also a credit note for the handling charges. There are some standard reports for the RTV analysis. In conclusion, some of the benefits you will see from implementing the Return to Vendor module are: you can gain better control of defective stock to help reduce cost and waste, and also improve your quality performance by not accidentally using defective material. It reduces duplication of entry and is an efficient process for managing purchase orders and supplier credit notes. And it is fully integrated to the financials, allowing cost reporting and return analysis. That concludes the overview demonstration of the SysPro Return to Vendor module. Thank you for your time.